The big ET Now exclusive. Axis Bank and Telecom Ministry seems to be on loggerheads. Sources tell ET Now that Department of Telecommunication has instructed all telcos and internet service providers not to accept any new bank guarantees from Axis Bank. Take us through all the exclusive details that you have. Why has DoT issued such an instruction against Axis Bank?
This is the big ET Now exclusive. We do understand that on the 16th of March, the Department of Telecommunications has written a strongly worded letter to all telecom operators from a Bharti Airtel to a Vodafone to a RelJio to Reliance Communications, as well as to all internet service providers, that Axis Bank is in serious breach of trust and contractual obligations with the government of India. Axis Bank under the wrath of ire of the Department of Telecommunications for failing to invoke a bank guarantee of the Aircel group of companies. That is why the Axis Bank as well as the DoT seem to be at loggerheads, and so much so that the DoT has now instructed all telecom companies and internet service providers that they are not allowed to submit any new bank guarantee of Axis Bank, and that will also include for any kind of renewals. So that's the instructions that have been issued by the DoT as recent as on 16th of March to all telecom companies, clearly upset that Axis Bank failed to invoke that bank guarantee. In that letter, I do understand that the DoT has written that Axis Bank has breached contractual obligations, that is in serious breach of trust of the government of India. It's going to be interesting to see how all of this pans out. We're yet to hear from Axis Bank on this issue. Remember, Aircel is now under insolvency as well as bankruptcy. Its case has been referred to the NCLT as well. So maybe Axis will also have to do what the NCLT instructs it to do. But clearly, this is not good news coming in from Axis Bank at all when you have a ministry finding the bank to be guilty of failing to meet contractual obligations, of being in serious breach of trust.
Right, Nayantara. This is, of course, exclusive details, as Nayantara just pointed out. This is another exclusive that is breaking right now on Axis Bank. Let's just, Nayantara, could you just give us a gist that this is one of a kind that is happening right now, or do you expect it to spread to other banks? Or it's very difficult to say that at this point of time?
No, how can I say if it will spread to other banks, Pankaj? Because in this particular case, obviously, why the DoT has taken this stringent step is because Axis failed to invoke a bank guarantee of Aircel. Now, it's also common practice for all telecom companies and ISPs to be submitting such bank guarantees with the government. It's for all the spectrum they hold, the various licenses that you have. Also, bank guarantees are held of other operators among themselves because of the interconnect usage charge. It's a very standard operating procedure in the telecom industry to have bank guarantees, and if Axis is failing to invoke one on the instructions of the government or of the NCLT, that is why the DoT is upset, and that is why it has issued this instruction to all telecom companies as well as ISPs. And like I said, not good news for Axis Bank that you've got a ministry under the central government saying that here is a bank that has breached trust and is in violation of contractual obligations. Will Axis take it lying down? Is it going to move court against it, or is it going to try and course correct by making good on that bank guarantee?
Thanks for these exclusive details and making us understand that this is something which needs to be tracked as far as Axis Bank is concerned. Let's just look at the markets. Overall, markets are not in a good shape this morning. Not that they are falling or cracking, Nayantara, but 35 points down. Look at the broader markets, 1.5% down. So that's primarily what you are seeing as far as this particular markets are concerned. The broader markets are the pain point. The broader markets are the one that essentially are seeing the pain point in the market. So it's not the large cap ones. Large cap ones are not that high. Just look at the broader markets, 1.2. Nifty is down close to about 0.2, 0.3%. The broader markets are down close to about 1.5%. And that will tell you that the advanced decline is not particularly that great. So that's something which is not looking good at this point of time. 1.6% down for the small cap index, as much as 2% at this point point of time. So really, the advanced decline, just look at it. It's just red. I mean, you could just see a very, very marginal green as far as the advanced decline is concerned. Declines are much, much more than advances, and that's the pain point in the market. In the morning, markets opened down. The broader markets extended gains, extended losses, but the main markets, Nayantara, have really not picked up. Not really looking good if you're an investor or on the bull side in the market. The volumes are not that high. I spoke to a couple of dealers and they say volumes are absolutely dead at this point of time.
So that's how the markets are stacked up at the moment. And, maybe one of the big reasons also, Pankaj, is not just the PNB fraud, the Nirav Modi fraud, because you've also had twin delight on the economic front when the IIP data and the inflation data had come out. But is it also not being able to find the next big trigger? That could also be a sign of worry as far as the markets go. You're seeing economic revival in the US. So are, inflows now preferring the developed world as against the emerging markets world. But while we're talking about trying to find triggers, let's also discuss the macros. The show is called Market Sense, where we discuss long-term fundamentals, and we do dedicate a segment to the macroeconomic fundamentals. And here's Shogato Bhattacharya of Axis Bank, the economist, joining us. Hi, Shogato. Last week we did see data come out as far as the current account deficit goes. What did you make of that data?
Well, I mean, 2% of GDP. That is more or less in line because from the current account side, we already had a fair bit of idea on the goods and services trade. So remittances, something that we have been worried about for a while. Remittances turned out to be better than we had expected, so that's a bit of comfort. Overall, I mean, it's not as bad a deterioration as we had expected, given the weakening of the rupee. So, I mean, I think you will still see some stress in the current account deficit. The fourth quarter obviously will be better because that's the way that the seasonal current account deficit works, because our exports are normally higher in the fourth quarter. But overall, I have a feeling that our total current account deficit for this year is probably likely to be about 2%, 2.1%. And given the way that we are seeing developments in exports and imports, and with the assumptions that commodities prices, oil prices are going to remain at about the current levels, oil in particular at 60 to 65, again about 2.1 to 2.2%. So certainly a little bit more stress than we had seen in the current account deficit in FY17. About minus 0.7%, 1%. The real worry now is not so much the current account deficit as the capital account, because the current account deficit that we had the amount of capital flows, particularly portfolio flows that had come in, that is likely to be much lower in FY19. FY18 is almost gone. FY19. And that is something that we need to understand and monitor very, very carefully, particularly given the way that the Federal Reserve Bank, we expect them to raise rates the day after tomorrow, and probably again 3 or maybe even 4 rates. So the capital account is something that we need to be very careful about.
Okay, so that is what we need to be careful about when it comes to this. But Shogato, let's talk a little ahead as well. Now that you've got the RBI, for example, banning LCs and letter of intent, when it comes particularly to imports, how is that going to impact the trade deficit going forward? If you're going to have the importers at a disadvantage, that's obviously at some level going to be reflected in the macroeconomic data as well.
Absolutely right. But so first thing, I think obviously the first sector that will be affected, impacted, will be the gems and jewelry segment. So import of gold, of precious stones, diamonds, etc. So all of that, and then going on from there, exports of gems and jewelry. So that's the first domestic impact that's likely to happen, and then after that are the other segments that have been dependent on LOUs. Now, again, with LOUs, I mean, one of the primary sectors has been the gems and jewelry sector, but there are other segments as well that has been that have been using the LOUs. So the first sense is that there will be a shift in demand from overseas, from offshore funds, foreign currency funds, into domestic funds. So the importers will have to raise money domestically and then swap it with foreign currency funds. Our sense is that after the initial impact in late February and early March, I think things are already beginning to normalize a little bit. You would have seen the very sharp drop in the forward rates, which was an indication of the demand for dollars coming in from inside. That seems to be normalizing. So my sense is the costs of imports are definitely going to go up. Relative to what they used to be in the past, but my sense is that it's probably not going to have a huge impact on either the total amount of imports that we are going to have in the system, as well as the cost of trading, imports primarily, but also exports to a limited extent.
Right. So that was, of course, about the Indian macros. You mentioned about the Fed rate, the Fed meet. This time around, it's going to be interesting. New chairman, first commentary, first impact. Markets would watch. In fact, all the global investors would watch quite keenly.
Very well put. Very well put. You're completely right. That, I mean, this is the first time that Chairman Jerome Powell will be heading the FOMC. So markets will be looking to parse his comments very, very carefully. But I have a sense that, I mean, he's already expressed that he's not going to do anything very different from what used to happen in Janet Yellen's days. So it will be the same gradualist approach to raising rates. So, I mean, people will be looking for the dot plot on whether the majority of the members of the FOMC indicate a more sharp hike. But given the way that we have seen current retail data softening a little from what we had seen in February and January, my sense is that will probably again look to a 3 hike in 2018. But markets are already beginning to factor a 4 hikes, that is to say 1 full percentage point hike in a thing. So, and together with this, of course, the ECB's, the European Central Bank stance on whether to start easing off on their quantitative easing in September. That's another major factor that is likely to keep markets busy.
So, Gata, could you also just talk to us about what happens when rates go up or the changes come in as far as dot plots are concerned? How can markets react quite significantly to that?
So, I mean, the way this happens is, if you remember, the last year was marked by enormously, I mean, very unusual low volatility in the markets. People were expecting very, very small hikes, not even 3 hikes from the Fed. So markets were very, very were smooth, very, very low volatility in the markets. That tends to encourage carry trade. So you raise money at very low rates offshore and then bring it out to all emerging markets to get higher yields, higher interest rates. So that's something that's likely if they do indicate a higher dot plot trajectory. So volatility is likely to increase in the market. So that reduces the scope, the potential for carry. So that means lower funds into emerging markets. And India, being one of the emerging markets, will also get a lower volume of funds. So one of the things that we need to watch is how equity markets react to the rates, because that will be the first trigger for a change in direction of the currencies. And then if that triggers a potential movement out in debt funds, so that's the sequence that will probably happen starting from the 21st.
Right, so Gata, thank you so much, and we'll hope to chat with you again once we have the details of the Fed meet, which is expected to come at about Wednesday night India time, or Thursday morning is when essentially our markets would react. That will be, of course, one of the big global triggers throughout this week.